Hello guys, and welcome once again to my YouTube channel where I share with you quality content regarding the financial markets. So in this particular section, I wanted to share with you some of the best, I can say the best strategy that you need to be having, that you need to be knowing, uh, in order for you to realize profitability, especially in this current age, in this current phase that we are currently in. We are currently in a very, very interesting time, even in the trading era. This is a very, very interesting time. This is one of the fastest times that one can actually realize the millionaire status or the billionaire status, and even in the trading space, because of the advancement in terms of knowledge. So even the information that you're supposed to be knowing right now in trading just to be advanced as well, to cope up with the times that have changed. So if ever you only are still following people with updated information, it's high time that you start to open your eyes and see where the future of trading is going, and you actually jump into that future and start to realize consistent profitability using the strategies that are currently relevant to the current market conditions. So I just want to take a look at gold. In the next, the interesting part about what I'm going to be doing on this particular YouTube channel is that each and every single day I'm going to be doing back tests. I'm going to be back testing my strategy with you guys here, so that you see how effective my strategy is. Just for someone who might just want to see how effective my strategy is, I'm going to be doing back tests from as far as let me see how far backwards I can go. Just doing back tests, just doing back tests, just doing back tests. Right. I I'll be back testing all the way from the year that I was born, from all the way from 2001 up until 2023. I'll be doing back testing my strategy to you guys, showing you that my strategy, even if I started trading 10 years or 20 years ago, it was still going to be as much effective as it is today. So I'm going to be doing those back testing videos on gold, on US 30, back testing on gold, US 30, GBP USD. Those are my top three pairs. Also, I will go to Nasdaq. I'll go to even some of the major pairs, your odd USD, your Euro USD, your USD JPY. I'm going to be doing back testing all those pairs. So it will help you to make sure that you're subscribe to the channel already, and you hit on the notification bell, because these videos are going to be coming each and every single day. I'm going to be making more than 2 videos each and every single day, to make sure that I cover as much ground as possible, revealing, exposing, or what can I say, showing you the proper way to trade and the proper way to look at the markets according to the current markets, that we are currently in, according to the current time and the current age that we are in trading. So let's go straight into the video. So this is gold. Gold for the past, let me say, for the past ever since this year started, gold has been in an uptrend, as you can see, right? But now you realize that there is this highest point that it has reached, right? This is just the previous major high according to the left side, as you can see. So that's a simple basic level of resistance. If you check first touch, second touch there, that's a resistance where price it's a resistance that it created in 2020. So that's actually makes it a very, very strong resistance. So it being a strong resistance like that, that's why you see the market dropped from there. So right now it might just a rough overview. It can even come back, test it before maybe dropping. That's just the rough idea. So what you're doing here on the weekly, you're simply having a rough idea, a rough bias of what is currently happening. So internally, what is currently happening is what we call bullish order flow. We currently have bullish order flow ever since we established this internal change of character. After that internal change of character, we now have bullish order flow, high highs, high lows, high highs, high lows. So that bullish order flow now, it's still continuing. It's still continuing. It can even continue and break that resistance further. But right now, the probability of the market breaking that resistance, it's very low compared to the market giving us a form of a pullback before that continuation happens to the upside. So on the looking on the weekly time frame, you can actually see, if you look to the left, if we look to the left on the weekly time frame, if we look to the left, we actually we actually tapped into this major demand before we shoot up this major demand. This was actually a high probability zone that you could have actually started buying. It was around September 2022. That's when it actually started buying so much after hitting into this demand. So this was a high probability zone for someone to start actually taking long positions on gold last year in October, September, October, around those regions. That's when it started to really buy so hard. So they would have actually used quite a number of confluences. In our mentorship class, we cover quite, our strategy covers both institutional and retail trading strategies. You realize that applying both or our strategy, you realize that here you would have realized this entry based on this demand and also based on this trend line breakout. You would have also gotten this entry, right? So after seeing that, you can actually see that this was a change of character, right? Change of character to the upside. That's a change of character. Change of character simply means momentum is shifted. If ever momentum was going down, it is now shifted and it is now going up. If ever momentum was going down, momentum is now to the upside. So this is what is currently happening. This is what you are currently seeing here. Momentum is now to the upside, right? Even if momentum is not to the upside, you need to be careful and know that market doesn't just go up in a straight line, right? It doesn't just go up in a straight line. Let's go down to the daily time frame. Let's go down to the daily time frame and get more details on what is currently happening. So this was the major zone. I showed you how you could have entered there. This was the breakout there. This was a very clear entry. Long-term buys, you could have entered them there. Your target was going to be this region where I placed my change of character. First target, after it was reached, you look for the next target, which was this high. Third target, those highs. So if you notice, if ever someone was a positional traders, these are traders that can hold trades for months and months of holding. They are bigger than swing traders. Swing traders can hold for weeks and weeks of holding, but positional traders can hold for months, sometimes even go over to a year of holding a trade. For example, in this case, this was around September, October. Positional traders right now, remember what I said, this was their first target, second target is here, third target is there. Remember, forex trading, it's a very big industry. It's a very big industry. If ever you only think in terms of small numbers, whereby you only think in terms of the few thousands or the few thousands that you are currently trading, there are people who are trading millions and billions of dollars on the financial markets, and those guys, they actually can hold their trades so much, so much. So now, what I like now, remember, according to our strategy, after every change of character, the market must give us a pullback where into a region of discount. What is a discount region? Any zone that is below the 50% Fibonacci. 50% Fibonacci, I'm talking about these regions here. And if you notice, as the market was going up, we never tapped into those regions. Why? What they are doing, what they do. So what they do, they will be respecting trend lines. What they are simply doing, they're simply doing that to trap retail traders, that when they take out their stop losses behind that trend line that we did, that they'll be taking out to the downside. So now, after you've realized that, you realize that let's mark the zone where I'm expecting the market to tap onto. This market can drop all the way into this region and before continuing to go up. This market can even come here as well. But this one at the bottom, that's a high probability. This one is a high probability demand more than that one that is above it. This one is a high probability demand. This one that is at the bottom here, high probability demand that I'm looking forward for the market to come and tap onto. Those are regions where the market, you realize that for the rest of this year, according to what I'm looking at, for the rest of this year, gold can actually play around, drop into this region, drop into this region before a continuation up. These are moves that can happen for the next upcoming months. This is what can actually happen on gold. Your mentors, your so-called mentors, they actually are not aware of this because they only have a small, a lower time frame picture, which is a lower time frame view of what is happening. But as we have a long-term picture of what is happening, what is going to happen, we know all of that, what is happening and what is going to happen. So now, to the upside, what I like to the upside, we have a change of character to the upside. That change of character to the upside is simply there to facilitate the pullback. Remember, after a change of character to the downside, we expect a pullback to the downside before a continuation to the upside. So this is a change of character as well. But this one, I call it a minor change of character, since it's a change of character, that is simply there to facilitate a pullback to the downside. So that change of character to the upside, it's there to facilitate. So this market now, it can go as far as this high here. It can come as far as that high before it drops, right? That's the latest that it can come to. It can come as far as this high before the drop, right? That's the latest, that's the furthest that it can push onto. But I also have specific zones that I'm looking at, which is this supply here. This other supply there at the top, it was actually it was actually mitigated, so it might not come all the way there, right? So I'm looking at this supply there for our sales to the downside. That is our supply. And once we enter there on the supply there, our targets, we are simply looking to the left. Looking to the left, I'm looking at this first major low there. That's my first TP, first major TP. Remember, we can hold as far as that. We can hold as far as that. That's my first major TP there. Or this one as well. This low is also a TP that one can also consider. TP that one can also consider. Which other level can actually one also? So TP there, TP there, TP here, TP here. So these are 4 major TPs that I'm currently looking at on gold. 4 major TPs going to the downside. 4 major TPs going to the downside. So I'm looking for something like this before a continuation down. Obviously, once we tap into the region, we expect the extra confluences that I look at. Extra confluences like your internal change of character. Once that internal change of character happens here, it means we are going to sell, take our sales there. But if it comes, breaks above, comes there, we can also expect once we get our rejections there, we can also sell from there, our stop loss above. Then we actually hold all the way, first target, second target, third target, fourth target, before a continuation to the upside. So this is institutional knowledge. This is institutional knowledge of trading that is at a higher level. This once you have this understanding, understanding that I'm telling you in this particular video, you will never be manipulated again in your trading, because remember, the market operates based on supply and demand, and for the markets to move, they need what is called liquidity. For the markets to move, or for the institutions to move price, they need what is called liquidity, and liquidity can only be collected through retail trading knowledge. So retail trading knowledge, basically, it's information or that you have been given, information that you have been told, that is designed to be a form of liquidity for the institutions. So the retail trading information alone is not good enough to make you money on the markets, because it is certain manipulation that is behind it. So this is what I'm looking at on gold. This is the higher time frame picture. So here, even after this change of character here, even after this change of character here, you could have actually gotten this buy to the upside. How could you have gotten this buy to the upside? Let me just show you real quick how you could have actually taken advantage of these buys that are happening into our region. Remember, our region is here. This supply there was retested. Those are sales that you could have taken going down. This one was also retested. You would have also gotten sales going to the downside just by following that push, pull back, push, pull back into the supply. Right now, we are yet to pull back into this. This is the region that we marked according to the daily. That's the region according to the daily. So I'll just leave it like that. So here, according to the downside, I'm just wanting to show you how could you have taken advantage of this current buys to the upside that have been happening ever since the 29th of June up until right now, the 20th of July. This is almost 1 month of the market pushing in one direction. See, a simple way, someone could have just drawn this. Someone could have just drawn this trend line, right? Trend line, touch, break and retest of a trend line, right? Once you have a break and retest of a trend line, I know that my target is that region, right? So I can hold as far as that major supply there at the top there. I can hold as far as that, right? So someone could have entered based on that, right? But us now, smart traders, we are now smart now. We know what we do. We know what we are doing. So in this case, I can see that we have a demand. I have a demand here. I could have entered exactly on that demand. I could have actually bought exactly on that demand zone there. Exactly on that demand zone there. Stop loss below the demand. Right now, it would be in a trade that could have been held all the way, all the way. It's almost all the way into that region. It's actually a 1:13 risk to reward. If ever we entered on the 4 hour, if ever we entered straight on the 4 hour time frame, it was going to be a 1:13 risk to reward. So all those buying setup that you have been getting from your so-called mentors along the way here, those are simply pullbacks of a move that started here. Those are pullbacks of a move that started way, way, way here at the bottom. They can't even show you where the move started. They don't even know themselves. They don't even know where the move is going to end. So that's the disadvantage of having a mentor who doesn't have this futuristic knowledge of trading, futuristic knowledge or insider knowledge of trading. Once you have this insider knowledge of trading, you are immune to any form of manipulation that can happen to retail traders. You are immune to any form of manipulation that can happen to retail traders. You are immune to all of that. So even here, so this is the high probability buy that you could have taken, right? I actually showed you the high probability buy that you could have taken. Let's look to the left here. Let's look for a risky entry that one could have also taken. This is a risky buy that one could have taken. This demand here. Why is that a risky buy? The reason why it's a risky buy is because internal order flow hasn't shifted, right? It has simply tapped into the region. Internal order flow, if you look at internal order flow, is bearish, 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 taps into the region. One can actually take a risky buy. What is a risky buy? The risky buy here, you would have simply bought by the market tapping into the region and rejecting here. You would have bought your stop loss was going to be wide below here, right? That's a risky buy. But this one is a much more higher probability buy. It's a higher probability and also a safer buy than this buy that you would have taken here. So that's a safer buy. So everything that is now happening in between here, these are just now just pullbacks, slight pullbacks, but the move is from this region to that region. Remember, the market moves from one major region to the next major region. The market moves from one major region, one major zone to the next major zone. From one major zone to the next major zone, that is how the market moves. That is how the market moves. If ever your so-called mentor didn't tell you, I'm now telling you the truth. The market moves from one major zone to the next major zone. Where is our major zone? Our first major zone is this region here, this whole zone here, right? This is zone, major demand into a major supply, major demand into a major supply, major demand into a major supply. All these other supplies that are in between here, those are simply supplies that have been designed to also trap those people who don't have an understanding of what really goes on the market. So especially this one, someone could have seen this supply and sold aggressively on that supply. But that's wrong. That's wrong because there is a supply that the market wants to reach onto, even this other supply. It's not even a selling zone there. These are simply the zones that the market is simply going to, if you check here, it put back into this. This was a supply, put back into that supply because there was now a demand push. Same thing here. What is going to happen even now here where the market is currently? The market is simply going to give you a pullback push into up until we have reached our final zone, which is this region. And that zone can actually be reached anytime between tomorrow, yeah, anytime between tomorrow. If not tomorrow, it will be next week. So once it has reached our zone, I will actually also I will share a video with you. Once it has reached this zone, I'll share a video with you and give you the entry point for the cells. And those cells, remember, we are going to hold them all the way to these TP levels that I've drawn, to the downside. We are going to hold all the way. I'm going to hold all the way with you to the downside. Those trades, I'm going to hold with you all the way to the downside. So, guys, this is it. This is inside information that you need to know. Inside information. So here, this buy, short-term targets, you could have used this or this supply or this supply. So according to me, this was the first major target, second major target, third major target. So this is what has been happening on gold for the past 1 month. This is how you could have caught this buy that has been happening. These buys that your so-called mentors are now freaking out on and say, hey, what? There's nothing. There's nothing. Like if ever you know where the buy started, if ever you know where the move started, they don't even know. Most of them, they don't even know where the move initiated, and I'm actually showing you where the move actually started. The move actually started here, exactly here, here. So here, refining this on 1 hour, that's going to be this. And refining that, it means we are shortening our stop loss, shortening our stop loss, and it's actually now closer to 1 is to 18, 1 is to 18 risk to reward, which is almost 1 is to, if you push it further, that's almost, it's going to almost 1 is to 20. Let's refine that 1 hour supply. So here, let's refine the region. Let's see which one is the region. If this is the supply here on 1 hour, that's the supply there on 1 hour. So there, once we refine there, you realize that this trade on its own, it's almost 1 is to, let's see the risk, correct risk to reward, 1 is to 20. 1 is to 20 risk compared to reward. 1 is to 20 risk compared to reward. And it was actually a very, very huge swing trade. And as it was going up, you would have actually been scaling in, especially on any zone of pullback, it was actually your opportunity to scale in. And as you scale in, you realize that even the risk to reward, it's no longer the same, risk to reward that you had initially. In this case, for example, here, this pullback that happened here, pullback into this demand here, you would have actually scaled in. Where you have scaled in buys, you would have scaled in more buys here in this region. I'm simply expecting a pullback as well here. You can also scale in more buys there on that region here. All right, let me look for another zone where you could have actually scaled in of these buys that started here at the bottom. Let me look for another region. Let me look for another region that you could have actually scaled in on. If you look at this was a demand broken, retest, broken downside, broken to the downside, broken to the upside, retested. There you could have also scaled in buys. Simple, you could have scaled in buys here. You'd have scaled in buys there. Which other region? If you notice, we have a support, a resistance, broken, retested. That was also a zone of scaling in. Where could you have scaled in here as well? You'd have scaled in here. So here I'm showing you how you would have maximized on this move that started here. Those are entry points. Oh, these that I marked in circles. These are entry points, entry point, and these are high probability entry points. These are not just entry points, but high probability entry zones that you could have actually entered on. Right now, all you just need to wait for the market to close above that supply, which will now be a demand, which is this one, right? Wait for the market to close above. Once it closes above, wait for extra confluence, whether be it chart patterns, be it your whatever, but wait for extra confluence. Once you get that extra confluence, you can actually maximize on the opportunity and actually so here it's above, it's kind of above, but just wait for extra confluence before, wait for the market to really form market structure, clear market structure, like maybe giving you your chart patterns, whatever. Then upon the breakout, that's where you can actually also scale in or maximize on that push to the upside. So this is what has been happening in gold for the past 1 month. The market has been simply pushing in one direction. Remember what I said, the market moves from one major zone to the next major zone. The market moves from one major zone to the next major zone. That's how the market moves. That's how the market moves from one major zone to the next major zone, one major zone to the next major zone, one major zone to the next major zone, one major zone to the next major zone. That's how the market moves. So here We are currently at this particular major zone here, which was a supply, but it's almost becoming a demand zone to push price higher up until we reach our final zone, which is that region. Once we reach there, and I said I'm going to give you the selling swing sell opportunity going to the downside. I'm going to give you the swing selling opportunity. I'm going to give it. I'm going to show you how you can actually maximize on this swing selling opportunity. So if you're not part of my community, you can join the links that are in the description below. There's a Telegram link, there's a Discord link, there's a WhatsApp link. All those are free groups that you can actually join and start to benefit out of this knowledge, out of this knowledge that is so deep, that is so profound. So in this case, once you get here, a risky entry is once the market taps here, rejects, you sell your stop loss above. That's a risky entry. Then a confirmed entry is when you wait for the market to tap into the region. Let's say it will be going up, high highs, high lows, high highs, high lows, high highs, high lows, high highs. Wait for the break of the internal change of character. Once you get that internal change of character, you enter. Once you get this internal change of character, you enter around here. You sell your stop loss above there. Even the trend line breakout on the retest, you also sell. Those will be other zones that you'll be scaling in on. Those are other zones that you'll be scaling in on. So this is what has been happening. This is what has been happening on gold. And it's high time that you start to wake up and actually look and actually invest much of your time in knowledge like this. People that can actually show you what has been happening. Why has it been buying? Why has it been buying for the entire 1 month? Why has gold been buying? And why am I saying it's going to sell for almost the next 1 month as well that is coming, which is almost it can actually hold all the way for the rest of August. This downward push to the downside, that first target, and those other targets that I showed you. These are the kind of videos that you must be investing much of your time on. These are the kinds of videos that you must be investing much of your time on, unlike just following people who will show you how to flip accounts. But me showing you how to flip an account is not good enough to make you profit, because at the end of the day, you are just motivated, you are just inspired for that moment. But at the end of the day, you go on to blow your accounts as you have been doing, because you don't have the correct knowledge. You don't have the correct knowledge. You don't have this correct knowledge that is going to protect you from blowing, that is going to protect you from any form of manipulation that is there. If ever your mentor or your so-called mentor, if all he knows are retail trading strategies, you are actually at a danger. You're actually at a high danger. You're actually at a high danger because retail trading strategies, as I said, if you remember and mark my point correctly, they were designed to be manipulated. They were designed to be manipulated. They have certain manipulation that lies on retail trading strategies. So if all they know is retail trading strategies, don't listen to all that bullshit where people they tell you that institutional trading strategies they don't work. Those are people that are ignorant. Those are ignorant people. It's like people who heard about forex trading 20 years ago and they say this thing is a scam. Those people were so ignorant enough because this was a very, very smart way of making money that at that time it wasn't there. And when the time it was introduced, many people, because of their minds that are not used to change, their minds that are not ready for change, they were not even ready for it. The same thing with institutional trading strategies. When people like me are coming out in the light like this, to share with you that institutional trading strategies, they are real, they exist, and they are working. They actually can give you a higher, faster winning rate more than you just using retail trading strategies. So guys, I hope you gained some value in this video. Make sure that you give this video a thumbs up. That's the best thing that you can do. Give this video a thumbs up. Make sure you subscribe to the channel. Make sure you hit on the notification bell, because the next upcoming videos are going to be so mind-blowing. They're going to be so mind-blowing as I'll be breaking down so many charts with you, showing you that institutional trading strategies combined with retail trading strategies, that's the only way to go. That's the best way to go about it. That's the best way to always realize consistent profitability. If ever all you know are retail trading strategies, you are bound to you are bound to fail at some point. You are bound to be manipulated at some point. So guys, that is what has been happening on gold. That has been what has been happening on gold for the past 1 month. This is what has been happening, and this is what is also going to be happening in the next 1 month on gold. Thank you for watching. Make sure you've liked, make sure you've subscribed, make sure you hit on the notification bell. See you in the next video.